Hi, just a quick update on where we are currently in the market with GME. Just wanted to point out the couple of indicators and the couple of things that I think will tell us that we're probably at the bottom of a possibility for some ignition. So here we have DPI, Dark Pool Index, so this is buying over the counter, not in the lit markets. This is the buying of the underlying. This lower bit here is the selling of the underlying, obviously coming down with price. The option, the market makers within the option are selling their positions back into the market to keep their books flat. We can see the price here. This is the price from the start of this recent rise. We can see that we had very high DPI going into these price rises, and we, in a couple of those occasions, both coming off that October bottom, we had some ignition there with some high IV. Didn't carry through because the market took off again going into the end of the year, and it was dispersed through the market when that happened. And again here in the February-March, we had a lot of compression within the main index, so we had high vol going in before we got the pullback in March. And when we got a pullback in March going into April, within the indexes, that volatility is spread around the market, that dispersion of the volatility as the market makers are trying to offlay their volatility. Before seeing quite a flat period, and then a sudden increase in the 30 to 60 day IV, and that's what I'm waiting to see here. That'll be the kickoff telling us what's happening. We did see it in August. We saw around the time as the JCB and the carry trade in Japan with the Japanese currency, the yen, fell over. That had some high IV before bottoming out and being spread quite violently around the market when we had a Vanna event, because everyone was well hedged going into that. Sell in May and go away. Well, most people just hedge and go away, so there were some long dated options there that were covering it, some put options. So the funny business period here that I think is very similar in these periods is going through the market. In October, we saw some funny business in the money calls, the low DTE, low days to expiry calls, about the 3rd, 4th, and again in about the 24th of October, before we saw this price rise and this high IV. Now, the reason it didn't take off and end up in a similar space to May is as we went through this period and Trump was elected, there was a lot of dispersion of the volatility through the market in the new Trump meme stocks, his friends, companies, his backers, and people who'd given him political donations. All of a sudden were in favour with a whole lot of new government policies, and so it was broadly spread around the market, a lot of grifting around the market out into all of these stocks. And because that dispersion, we did not see the price increases that we saw coming out of that April-May bottom. If we just have a look at the whole index, this is the period here. This is down here is the gamma within the index, and we can see as it's come off this bottom, it's tightened. Now, there was no funny business going on here, and that's why we got this compression of volatility and dispersion of the volatility into GME. Those later periods when we saw ignition, we saw the pullback here in going down into August. We saw this pullback here, just as we thought we might be igniting into another high, compressed volatility market with GME. We didn't see that with that pullback. We saw a little bit of it jump out, but then it was broadly spread across the market because of individual stock Vanna event that happened. Then we go through this high gamma market, and you can see it's almost at the same sort of levels that we're at now. We've had a high gamma market the whole way through to the inauguration at the 20th, when it's fallen back, and we've dropped our gamma dropped back in GME, and so did the reaching for the bid, and we'll have a look at that in the options in a second. So during this period here, this was dispersed. We had a lot of dispersion going through the market here before Trump's inauguration going into January. If we just have a look at that, we can see here, if we just have, someone calling me, I do apologise. If we just have a quick look at that here, this is a matrix, a linear time series matrix of options. These are green here are call options. highest delta on the left, and here highest delta puts, in the red are all the puts, and lowest delta or out of the money here. And I've got a 50 delta filter on it here, so I just want to see the at the money to in the money options, and we can see this is the current date. As we go back in a linear form, in time series form, we can see this kick off going into the recent price rises in GME, which started around the 28th. We'll go back and have a look at that in liquidity in a minute, but as you can see, we've come through this period. So if we have a look, this is where it fired. GME started to fire up, coming through the end of October. All of a sudden, we started to get an increase in calls. Puts pretty well held the same because they were sold puts, and all of a sudden we started to see some bought puts in the 70, 80 deltas. Through that period going into inauguration as there was more volatility in the market. And then we saw a crash in GME around about the 14th, but we can see that most people had hedged out that period going into the inauguration around the 20th before starting to, as these calls were closed down here, people just let the market pull back and go sideways instead of burning theta. They've waited for a period of time as the market has gone sideways, going through into the next occasion when they knew they could fire it up, and that was when there was extra hedging put in going through into this period for the earnings. And we can see here these longer dated options that have been held. All of a sudden we've had somewhere in the order of about 10,000 of them close here deep in the money. About 3,000 have reopened further out into the market, but nowhere near as deep in the market. And again, we can see some closing of those as the market has started to rise. Here again, over the last couple of weeks, we've started to see some more deep in the money, most probably sold puts here, just forcing those market makers to grab at the ask for their options for their stock to hedge. So again, we want to start to see this IV increase here in the 30-60 days. As soon as we start to see that here, we'll know that we're starting to get into that more meme stocky high gamma market. So a couple of things that have set me off to think that we're starting to get there is we saw this crazy pricing on Tuesday the 20th, EAD yesterday. We can see we've been around the 1,000 to 1,100% mark in deep in the money calls. So that's gone up somewhere from a really high day usually being 500 or 600%, or a low day around 170, 150%. All of a sudden it's at 1,000. So it's anywhere from 2 to 4 times as much. That, even though that's only a small number of options, 6,000 or 8,000 calls in that position, when you double their IV all of a sudden, that there is a real need to grab at the bid to cover that. The market makers know there's some funny business going on in there. They've probably been traded in and out during the day, forcing the market makers to keep on going to the bid and increase the IV. Yeah, you can see some other highlighted areas here. This is the earnings. There was some raised IV across the market on earnings day. We did have a lot of volatility on that day. And then we can see the price pullbacks on January the 26th was the start of the price pullback before bottoming going into the 16th to 21st. But if we go back to the last silly business in the money calls, it was around the 3rd. So during this building period, the 3rd of October and the 24th of October 2024 was the last time we had some silly business in those deep in the money calls. And so let's just have a quick look at where that was on GME. So we can see it was in this period here, where we were transitioning into going into the election. We had travelled through this period where here we're looking at the liquidity, where the liquidity had loosened up. Red liquidity is quite loose, green liquidity is tight. We've got several different displays here. The one that I'm really interested here is the liquidity sentiment. It's the overall liquidity. We can see here in April when we had a price around the $12, $13 mark, $11, $10 mark in GME. You would expect down there that there's a lot of buyers, so we had tight liquidity for that period. we're at about the same sort of level here. The price is now 2.5 times as much. We're up at the $27, $28 mark, but we've got very tight liquidity again. We can see that earnings was used to tighten the liquidity. We can see here in October, late September, again there was a period of tightening as we were going into that last month of the election, and then we had a loose sitting period for a while before the market makers were being forced. Here's the starting to force them to reach for the bid and increase that IV. Then we've had it peter out over this period as there was a dispersion in the indexes. If we quickly go and have a look at that dispersion, this is the dispersion index by CBOE. This is where we started last April, May. We had very low dispersion, and that's how we got into that event of those really good meme stock gamma price rises in GME, and it took quite a long time to start to dissipate and spread out. Then if we go in and had a look at October, it was very middling, but really there was quite a lot of dispersion in the market, more than in a normal volatility market. And we'll look at volatility in a minute in the VIX. The reason that we don't see it in these higher volatility markets, this dispersion here, is because everything is moving around a lot, so market makers aren't having to look for somewhere to offload their volatility from the compression of the gamma. Again, if we'll just quickly have a look at the VIX. So the VIX, this is the April market. It's run off here into this. As we were looking back in April at the index, we had some very high gamma there, and that because there was no meme stocks. There was no Trump grifting stocks with Trump's friends and investors, spreading that volatility out through the market as we did see during the election period. We saw this compression and that very high price rise in GME. This was the VIX through that Japanese carry trade unwinding, and this is going into the election. We had this slowly increasing until we got into the election, and then we went to low volatility, and that's where that October really got kicked off, and then we got into this compressed market. But quite quickly after that compressed market, we got a lot of high movement of stocks here. So a lot of new players in contracts and people who had been backing Trump in the election, all of a sudden their stocks seemed to be favoured and doing very well, and there was a lot of really big price rises in stocks that usually wouldn't have that we wouldn't see dispersion of volatility in there. So we just didn't see in October GME fire up during that period. Here we've come off this recent bottom here from the tariffs, and we've got back into this compressed market again. If we just go back and look at GME, so the things to note was this was coming off this bottom in April through to this high compression gamma market, where this period here looked like it was going to ignite. It's definitely had all of the indicators that it was going to ignite. Its IV was quite raised, but during this period here, going through to the election and after the election into inauguration, there was quite a lot of spread of prices through those new stocks in the market. Now, if we started to see that again, if we start to see dispersion around the market in Trump's favoured stocks, then we would see this price being in GME being compressed. So there's a couple of things to watch. But if we quickly go back and see the main things that I'm watching, we've had a couple of those silly business that we saw here in October in the calls. There's some funny business making the market makers reach for the ask, which will increase IV. But we want to see this IV jumping up, as we can see on all of these occasions here, when we've got compression in gamma in the market and compression in volatility in the market. We really need to start to see this 30 to 60 day IV climb up, as we did see it here in going into November, and then we might see some ignition, but I don't think we're that far away. Anyway, I hope that you understand that, and thanks for some time. Again, you're with Bruce from nakeddelta.com. You can get in touch with me on Twitter. We do liquidity and we do option data, and you can also get these updates on GME every day, and a lot of the best meme stocks around the markets at memestockwatch.com. Just touch base with us on Twitter, and we'll let you know how to get in with a coupon or a free trial on any of those products. Thank you very much.